Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. Wednesday was a volatile session, but of course, as day traders, 0DTE traders, we love the volatility, and there was plenty of good swings in both directions. Now, there were several opportunities we missed for a number of reasons, which we'll highlight here in a second, but managed to get off two trades, both winners, for an absolute return of $4,273 or 2.8% in our 1% risk model portfolio, where we are risking no more than 1% per trade. 75.05 long call for 41% return and 75.70 long put for 239% return. This was the big winner, of course. But let's go over to the charts. We'll highlight the setups, the trades I took, and the trades missed. The SPX closed down 1.21% to 74.20, closing at the 0 gamma level and implied low on the session. 2 o'clock, right here, we had the rate decision as well as the dot plot. Now, the rate decision did come in at expectations, no change, but the dot plot was hawkish and it sparked selling pressure right upon the release, breaking our risk pivot, the SPX flip level at 74.95, and moving swiftly in to our first support zone of 74.60, 74.50. Nice bounce here, reversion back to that risk pivot. And bulls did manage to put in a higher low. And for a brief period of time, we did trade back above that risk pivot, testing this multi-day downsloping trend line. So if we go to the 5-minute, we've been in a bit of a grind lower over the past couple sessions. And then obviously breaking that risk pivot sparks volatility. But we moved back up into that trend line, rejected it, and broke back below that risk pivot of 74.95 and moved back down into that support zone of 74.60, 74.50 before breaking it and moving into the major support level on the downside, 7400. In terms of opportunities, there were plenty, breaking that 74.95 risk pivot, so the break, retest right here, once again for that swift move lower. I did not trade this. I wasn't even looking at this. I was still digesting the dot plot information. Nonetheless, a very quick move. But keep in mind, markets don't move in a straight line. When you dump 1% in 5 minutes, you're going to see some sort of counter rally. So there was a really good dip buy here off the 50 handle. I tried to buy this with the 7,500 long calls. I put an order out for 850 and 3 seconds later, it was $10.50, $11, and I missed it. I didn't chase it, but obviously that was a nice play. I did enter, though, right around here, higher low scenario. This time I played the 75.05 long calls, and I got filled and took that profit into the move. The long put trade was the break of the 95 pivot right here. So I missed it once, but I didn't miss the second opportunity, and this was a nice move, closing down into 74.60. We were bearish. Obviously, it was a hawkish dot plot, hawkish Fed commentary. We had dollar up, rates up, vol up, and we're below that risk pivot. So we were looking for some continued selling pressure. I was looking to buy the 74.50 puts. Playing at least a move back down to that low. And if we tested that low, there was a good chance we would see continuation. And I put an order out here. But for whatever reason, the broker held my order. I did not get filled. But obviously, this would have been a good trade. And then, breaking that low, that support zone, you probably want to stop buying the dip. Generally the first or second counter move is the best move. But as soon as we broke that, quick move down into 7,400. Now, we did see a bit of a bounce here, like, 30 points in a few minutes. So this was definitely tradable. I just wasn't interested in this. Our thesis was kind of we would close near the lows. Looking at 0DTE options positioning, going into the volatility event at 2 o'clock, it was heavily put skewed, 25%. This is very bearish. We had the max put 7,500 and max call at 7,520. So with the risk pivot just below, it's not surprising we're seeing a lot of perhaps speculative positioning, but more so probably hedges. So when you're going into a volatility event such as FOMC, you often see hedge funds hedge downside with 0DTE puts simply because it's cheap downside protection. And being this close to a risk pivot, you're going to see even more activity. On the upside, the call side, we also saw a lot of at the money call demand around 75.20, 75.30, which if you recall, 75.25 has been, well, it was the resistance level going into FOMC, but it was a key level that we broke the day prior and was unable to reclaim. Now, positioning did persist to the bear side throughout the full session. I mean, put skewed remained around 20%. And then, of course, put activity, put positioning continued to push lower as the market moved down. And that max put, which under normal conditions, we would view this as a downside target and lower bound. A little bit different when you have the FOMC. But that max put just shifted lower throughout the full session, or the last 2 hours, to 74.50, all the way down to 7400. And this is speculative traders like us, just continuing to buy puts as the market moves down. But in terms of positioning, in terms of cross asset, in terms of market breadth, sector performance, it was most certainly a bearish session. For today, early pre-market, the S&P 500 is trading higher, up 0.7%, NASDAQ up 1.7%, and volatility being crushed, VIX down 7.8% to the 17 handle after rejecting the 19 pivot in yesterday's session. So big gap down here in terms of volatility. It is a potential exacerbating factor. Key levels to focus on: 17, a break above 17 potentially opens the door to 18, 18.2, and then back to 19. On the downside, 16.7, recent support, and then 16, the lower bound here from a couple days ago. In terms of SPX levels, a bit of a shift up, given the fact we have option expiration today, so gamma is very sensitive. 7400 is the put wall, 7500 the call wall and ABS, so potential upper and lower bound today. The SPX flip or the risk pivot remains 7495. So as long as we're trading below that, we would continue to anticipate elevated volatility. SPY flip has shifted lower to 744 or 7451 SPX equivalent. Potential pivot point today. If we can hold above, maybe a little bit more bullish. But if in the event we do break that, we have support 7430, 7420, and 7420 is also going to be gap fill. We're going to be opening up the gap higher here today. Bulls are going to try to put in a higher low. That's always the first indication of a trend change from down to up. The previous session's low is 7402. So if we break 0200 here, 7400, that is a continuation signal with support at 7380 and then down at 7350, 7345. If bulls manage to break 7500 today, we have that downsloping trend line still in play. So that's just overhead. But major resistance above that, 75.25, 75.30, with the previous session's high at 75.32. Transitioning over to our dashboard, total gamma exposure for the SPX remains positive, 95 million notional, although much more neutral than imbalanced. Trading below our main transitional level of 74.95, that is the flip level. Above, all strikes are positive, that is supportive for the market price. Below, most strikes are negative, that is destabilizing for the market price. Support 74.60, so that's following through from the previous session. 74.50 as well, but today it is net positive. 75.30 also net positive. Put wall 7400, that is the strike with the highest net negative gamma, and then 7500 is the call wall, the strike with the highest net positive gamma. Now, if we do break 7400, we have some support here, 7380, 7375, and then much more significant support down at 7350, 7345. On the upside, so above 7500, you can see 7525, 7530 zone, followed by 7550. My base case at this time is that the market just remains range bound, trading between the call wall and the put wall, or between the FOMC high, the FOMC low. But who knows? It is option expiration. Anticipate elevated volatility, some wild swings, particularly in the first and last hour of trade. In terms of the implied move today, 1.2%. That is an implied high of 75.09 and an implied low of 73.31.